Dear valued investors, warm greetings to all of you. I hope you're having a joyful and prosperous day. To begin today's market update, I would like to extend my sincere congratulations to all of you who have been following my videos and successfully acquired crypto assets at highly attractive price levels. Entering the market at a favorable price zone provides a significant advantage, and for those who have secured such positions, my strong recommendation is to continue holding your assets. At this stage, there are no clear technical or structural signs of distribution that would suggest an imminent downtrend or market exit point. Therefore, maintaining your current positions will likely allow you to maximize potential gains in the medium to long term. Let us now take a moment to analyze the latest developments on the crypto chart. From a technical standpoint, the overall price structure remains very robust. We are witnessing a clear uptrend supported by strong momentum. As is typical in any healthy upward movement, the market experiences intermittent pullbacks. These are normal corrective phases designed to eliminate weak hands or short-term speculative positions. These shakeouts are not to be mistaken for trend reversals. Rather, they serve as consolidation periods before the next leg up. It's also important to highlight a psychological aspect that often misleads retail investors. During bullish phases, many traditional technical indicators such as RSI, MACD, or stochastic oscillators tend to generate false signals. These may suggest overbought conditions or bearish divergences, prompting premature selling. However, in trending markets, particularly in the crypto space, such signals can be deceptive. Investors who rely too heavily on these without considering the broader context may exit the market too early or re-enter at inflated prices. For those of you who have already entered at a strong technical base, my advice would be to avoid checking daily charts too frequently. Short-term price fluctuations can trigger unnecessary emotional reactions, fear, doubt, or impatience that may lead to poor decision-making. Instead, consider reviewing market movements every 2 to 3 days. This more measured approach can help you maintain psychological discipline and avoid selling too early due to momentary volatility. Once the price appreciates significantly and reaches key resistance zones or shows signs of exhaustion, then it would be more appropriate to monitor the chart more actively on a daily basis. Alternatively, you can continue following my market updates, where I will provide timely insights and recommendations on when it may be prudent to take profits or rebalance your portfolio to safeguard your capital. In closing, I encourage all investors to maintain a long-term perspective, stay informed, and remain patient. The market rewards those who can align technical analysis with strong emotional control and strategic decision-making. Next, let's take a closer look at Ethereum ETH. When observing the current chart, it's almost hard to believe the strength of its upward movement. It's been performing exceptionally well. Congratulations to all of you holding ETH in your portfolios. You've done well, and I strongly encourage you to continue holding your positions with confidence, as I believe there is still significant room for further growth. At this point, I'd also like to emphasize the importance of patience. Remaining disciplined and waiting through market fluctuations is key to optimizing your long-term returns. For those of you considering entering a new long position, I would advise caution. Buying at current price levels is not ideal, as the risk-to-reward ratio is no longer favorable. If there are any signs of a trend reversal or downside correction, being forced to sell immediately would be unfortunate and unnecessary, especially when it could have been avoided by waiting for a better entry point. As retail investors, it is crucial that we time our entries carefully. Opening a new position should only be done at technically strong and favorable price zones to ensure both profitability and capital protection. On that note, I also provide personalized portfolio consultation services, including advice on ideal entry and exit points for stocks or crypto assets you're currently holding. If you've recently entered a position at the wrong time, or at an unfavorable price level, or if you're unsure about your current holdings, feel free to reach out to me. I'd be happy to help you optimize your portfolio, identify strong performing assets, and guide you in building a healthier and more profitable investment strategy. Moreover, if there are any specific stocks or tokens you are considering adding to your portfolio, you're welcome to ask me anytime. I'm here to share insights and help you make better informed decisions in the market. Next, now take a look at the chart for Apple. This is a stock I've discussed repeatedly with investors in previous updates. Specifically, I've emphasized that the buy zone around $209.4 was an excellent entry point. For those who followed my earlier analysis, you'll recall, also identified a clear sell zone, which I discussed in a previous video. Feel free to review it for a more detailed breakdown of those critical price levels. For investors who entered below the $209.4 region, my advice remains unchanged. Continue holding your position and exercise patience. The stock has strong fundamentals and technical support, and holding through short-term fluctuations will likely reward you with favorable returns. Currently, Apple is encountering a minor resistance level, which is typical and healthy in any stock's price movement. A period of consolidation or a shakeout is entirely normal as the stock works through this resistance. Based on volume analysis, there are already signs of volume exhaustion, indicating that supply and demand are being tested. These are important technical signals that suggest this resistance zone could soon be resolved to the upside. As a result, investors should give the stock a bit more time to process this level. I believe we may soon witness institutional buying activity driving the price significantly higher. At this stage, I would also caution investors not to chase overextended stocks, those that have already seen parabolic moves or have been driven up too aggressively. Those setups typically benefit only the early entrants. As retail investors, it's critical that we focus on quality setups with strong technical structures and safer entry zones to ensure both profitability and portfolio safety. Apple remains a strong candidate in that regard. With the upcoming product launch announcement, this provides additional catalysts that could drive institutional momentum and further price appreciation. Keep in mind, however, that markets often price in good news ahead of time. So it's essential to monitor the chart closely and look for confirmation signals. In short, prioritize stocks like Apple that offer solid fundamentals, technical strength, and strategic entry zones. This is how you build a portfolio that's not only profitable, but also sustainable in the long run. Next, continue with the chart of Google. As we can see, the stock has recently moved higher. While the price increase from my initial buy recommendation may not seem significant at first glance, those of you who followed my call likely secured a far better entry point than most investors. Remember, the best buying opportunities often appear when fear dominates the market. That's when others hesitate, but smart investors act. The entry zone I suggested was exactly during such a time. Now that the stock has risen, many are fearful of buying in at current levels, worried about a potential reversal. This emotional cycle, buying out of FOMO, fear of missing out, and selling out of panic, puts investors in a constantly anxious, reactionary state, which is not sustainable for long-term investing. If you're always nervous about every market move, it becomes incredibly difficult to build and hold a solid portfolio over time. As for the current price range, I do not recommend initiating new long positions in the next trading session. However, if you've already bought in at the earlier levels I mentioned, then just hold your position confidently. I've already highlighted the critical sell zone in a previous video, so if you're looking for clear exit guidance, please refer back to that analysis for a more precise strategy. While there are many good stocks out there, finding a stock that allows you to optimize both the entry point and risk-reward ratio is much more challenging. That's exactly what I focus on through my channel, sharing actionable, real-time trading insights and not just general commentary. You can consider this channel a practical investing hub, where we focus on buying and holding with strategy and confidence, not hype. I provide you with realistic, well-timed setups that help you build a portfolio that is both profitable and resilient. Next, let's take a look at the chart of NVDA. Based on the current chart structure, I believe the stock still has strong upside potential in the upcoming sessions. However, at this stage, a new buy entry is not yet favorable. The stock needs more time to consolidate and digest its recent price action before presenting a safer and more technically sound entry point. If the stock undergoes a healthy pullback or sideways correction, we can then reassess the technical signals to identify a low-risk buying opportunity. On the other hand, if the stock continues to rally without any meaningful correction, it would not be advisable to enter at elevated levels. Buying into strength without a proper setup poses unnecessary risks to your portfolio, especially for retail investors who need to protect capital. For those who entered the stock from lower price ranges, what I would consider an ideal entry zone, you should feel confident in holding your current positions and benefiting from the next potential leg higher. The broader trend remains intact, and the structure still supports a continuation move. Investing is a daily discipline, and patience is key, particularly for those who are currently tempted to jump into NVDA at current levels. I urge you to exercise caution and wait for a better setup before committing capital. In summary, timing and risk management are just as important as picking the right stock. NVDA remains a strong name fundamentally and technically, but chasing a breakout without confirmation can do more harm than good to your investment portfolio. Next, let's take a look at the chart of Pleater. From a technical perspective, the chart currently shows that Pleater remains in a strong overall uptrend. However, at this point, the stock is encountering a challenging price zone that may prevent it from breaking out immediately. After rebounding from a recent correction, the stock has not yet shown clear signs of a shakeout to remove weak holders, nor has it completed a confirmed double bottom pattern. These are important technical signals that typically precede a strong move higher. Therefore, my recommendation is to wait for a more favorable setup before entering a new position. The ideal buy zone would be if the stock pulls back to the $130.3 level, where risk-reward becomes significantly more attractive. However, if the stock doesn't fully retrace to that level, but shows signs of supply exhaustion and manages to close a daily candle above $130.3, ideally around $135.3, while holding steady and forming a balanced base, then a new long position may still be considered reasonable. As for downside risk management, the immediate stop loss or sell zone for Pleater is around $122.1. I've previously discussed this key support level in one of my earlier videos, which you can refer back to for more details. Personally, quite interested in Pleater. It's a stock I actively monitor because of its strong price acceleration characteristics. When this stock enters a momentum phase, it tends to perform exceptionally well and could deliver significant gains in a relatively short period if it enters a proper markup phase. In conclusion, patience is key. Wait for technical confirmation before entering. Let the stock either pull back to the right entry zone or show strong signals of accumulation before committing capital. Next, let's take a look at the chart for N2, which I already mentioned in a previous video. Currently, the stock is showing clear signs of a successful shakeout of retail investors, which, from a technical perspective, is often a very bullish signal. For those who favor setups like this could be considered a high-quality accumulation zone, a potentially ideal entry point. The chart shows solid base building activity, and there is also evidence of institutional money flow beginning to enter the stock. These are strong indicators that the stock may be setting up for an upcoming breakout or acceleration phase. However, we should note that while the price is stabilizing and showing strength, there hasn't yet been a full confirmation of supply and demand balance through a proper test or retest. Because of that, the stock might need a bit more time before making a decisive breakout move. The current price zone could be considered for new entries, especially if the stock continues to hold and consolidate well over the next 1 to 2 trading sessions. If N2 can maintain this balanced structure, investors might even consider scaling into a larger position, as it would confirm that weak hands have been fully shaken out and institutional accumulation is underway. The most notable shakeout was aimed at investors who entered from higher levels. These positions have largely been flushed out. Now, the stock is stabilizing beautifully, and I believe it presents a great opportunity for disciplined investors. The stop-loss zone or immediate sell zone for capital preservation was discussed in my previous video, which you can review for more details. To all investors, I hope you find strong and healthy stocks to add to your portfolio. As always, if you have any questions about the entry points discussed, or you're currently holding losing positions, especially due to mistimed entries, feel free to leave a comment or reach out. I'm more than happy to provide feedback and help you make better informed decisions moving forward. Please note that everything I've shared here reflects my personal opinions and does not constitute financial advice. Investing involves risk, and every investor is responsible for their own portfolio decisions. I believe that each of you is a smart and responsible investor, so trust in your process, take care of your health, and make decisions with clarity and confidence. Thank you for watching, and I'll see you in the next video.